and welcome back to Cheeky Crypto. My name is Nick and today we are discussing Bitcoin. We saw the FOMC meeting yesterday. We saw that the Fed decided to pause interest rates for the month. So let's go ahead and jump into what this might mean for Bitcoin. As I get into today's video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will not miss another video update. If you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out. Let's go ahead and jump right down into today's video, kicking things off with the 1 hour time frame. So here we have Bitcoin paired up with the USDT on the 𝗕𝗘𝗪𝗔𝗥𝗘 exchange. And yeah, we've been looking at this in some interesting patterns. We were looking to see whether or not this was an irregular flat based on the fact that we're on a daily 5-wave drop and we're in the 5th wave move to the downside. We're looking for 5 waves. However, looking at this, I think that actually we've kind of got this slightly off. I think we are not looking at an irregular flat situation. And I think we're actually looking at a double zigzag. And so let's go ahead and pull that in. And what we'll do is I'm going to tidy out a lot of the noise here just for a second, because I do think it's very important that we kind of just look at everything in a nice clean way. Okay, so essentially what I'm saying here is we have this bounce to the upside, but we are yet to breach this peak up here. Okay, this is basically our wave 4 high point on our daily time frame. It's also very possible that we're still in that wave 4 on the daily, but for now, considering the move to the downside here, we're going to consider this actually as a potential move of the 4th wave being done, and we're starting a 5-wave move down. And the structure that I'm going to go through with you today would basically indicate a diagonal ending to that daily pattern. So on this 1 hour time frame, we can see here that what I think is going on is a double zigzag pattern where we have an A, B, and C like this. The C wave truncating, not going down as you would normally expect it to, but it is still reaching its minimum expectation. This here would basically be a 535, for example. This side was a little bit more difficult to kind of get a good read on. I still think it is a 535, even though it's gone down deeper than the 1.618. So we were looking at this as a potential 5-wave move in itself. However, I think we've got an extension in one of the 5th waves that basically make it look like it's going down deeper. So for now, we have a 3-wave pattern to the downside. And then, of course, we get this move to the upside that's kind of gone above and beyond what you'd expect of the irregular flat situation. And within this particular pattern, we have some really obvious stuff going on. Okay, so in here with all these candlesticks, one of the key things to kind of point out is the overlapping structures. So we do have ourselves in some interesting kind of perspectives here. We have a 5-wave count here, we have a move down, and then we have this 5-wave count coming in here, okay, and it would finish here. This basically would be, again, a diagonal that would end that C wave. It's a zigzag pattern. We then, of course, have over here another zigzag pattern, correction, and then I think another zigzag. So we are looking for a triple zigzag, okay? Now, a triple zigzag would basically be a W, X, Y, and X, and then we're going to go for the Z. Okay, I'll just put that in the right spot right there. So W, X, Y, X, and Z, a triple zigzag pattern. Okay, now for the most part, if I go ahead and draw in the structures internally, you would see an A, B, C here, and you would see an A, B, C in here, and I think it's actually here. That's the one. Okay, and then we can see that we had the correction coming down, and we start to come up. We come down, we've got to go up one more time to complete the Z wave pattern. Now, there are some internal workings here that are a little bit peculiar. Okay, here we have this drop. Okay, this one here looks like a 5-wave move in itself. But again, it wouldn't make sense to be as such. So again, we would have to probably scrutinize that on a much smaller time frame, like a 5-minute time frame, to see exactly the inner workings here. Because again, this could be just a 3-wave correction, but looking like a 5-wave drop on our hourly chart. But for the most part, it wouldn't make sense for that to be 5 waves in itself. So we are still looking for this move to the upside. How high of a move to the upside are we looking? I don't think it's going to be overly impressive, but I think we can see a potential push here towards 27,650 to 27,850 right up here. Okay, but again, there is the possibility that we get this slightly larger move, which would mirror that of the W wave to a degree. Okay, I'm going to go ahead and measure that W, bring it over to our X wave over here. And we could say that we would be approximately, let me actually get rid of that one. No, let me get rid of this one right here. We don't need this one. So from here, we could potentially see a slightly bigger move, okay, on that Z wave. And I say potential, it's not a guarantee, but a potential bigger move upwards quite aggressively towards 29,000, right? However, in doing such a thing, we would break past 28,134 to 28,588. These two swing low and swing highs, because these are going to break our daily structure if you were to see that, okay? So some positivity to be seen there. So if we were to kind of get that extension in that Z wave and we were to cross 28,588, we would break our daily time frame structure. And that would be very bullish because we would break out the bearish moves that we're currently finding ourselves in. Now, on the hourly chart, we are in a bullish structure according to smart money concepts. So there's a little bit of positivity there. But I think for the most part, we'll just aim for now at 27.6 to 27.8. That's going to be an interesting spot for a potential Z wave finishing. Would finish off this structure. The other thing that's really noticeable here is the overlapping structures internally here. This shows weakness. It shows that actually, you know, for the most part, there's not a clear defined trend occurring, and we should be really cautious with what is potentially going to happen next. Now, taking this up into the daily time frame, as you can kind of see, all of this would then be a wave 2. Okay, and of course, we'd have to see whether or not we're going to break our structure by rallying up higher than 28,588. At the moment, we find ourselves with support here on the 200 daily EMA. Now, on the EMA side of things, there's some interesting things to kind of note. So what we're going to do is we're going to go ahead and turn a few things on, right? So we have our moving average here, the yellow line. This is the 50 moving average. And you can see how it's almost come down to the point where it is going to collide with and cross lower than the 200 EMA. This death cross situation is not a good sign. Now, again, I can go ahead and grab another indicator. Let me put one on here. I'm just going to go with a simple moving average this time. Okay, a simple moving average. And yeah, it's not going to let me. Okay, cool. I'm going to take one of these off. I'll take this one off for now. Let's go back into a simple moving average. Not like that, I'm not. So a simple moving average, right? We'll go ahead and throw that on. And we'll do is we'll go into the settings here. We'll go to inputs. What we'll do is we'll make this a 50 simple moving average. We'll make this yellow and we'll make it slightly bigger. Okay. What we'll do is we'll turn off the moving average. And so we've got a simple moving average instead. Okay. So an SMA. Okay. We'll then go to our white 200 EMA here, and I'm going to turn off the 50 EMA. I'm going to go to the white settings. So this one here is basically our 200 EMA at the moment. We're going to go ahead and change this to 21, and we'll OK that. Okay, now you can see that there's a collision course for a 21 moving average EMA and the 50 simple moving average. Okay, they were slightly further off and are slightly further down the line on this one. But again, very interesting to kind of see what's potentially going to happen here. And again, if we were to flip those around, so we'll take this and we'll put this into a 50 EMA, okay, 50 EMA, and then we'll go to the simple moving average and we'll go ahead and turn that into 21. Again, we can then see how things are also stacked slightly differently, right? So you can mess around with these and you can find different time frames that it might work for you and all those kind of things. But for the most part, we have this death cross looming when we start thinking about how we currently have a 200 EMA. So let's go ahead and put that back, 200 EMA. And we have our 50 EMA looking to cross. And again, we have our simple moving average all on a collision course for showing us that short-term price action is going to be going down lower than the longer-term price action. So we already know that on the daily time frame, it's not looking great. Again, this is also compounded by the fact that we're overbought aggressively so as well. So this move to the upside has brought our momentum indicator into an overbought range, which is basically showing us that we're having a weakness and we're likely to see reversal as momentum shifts back into more bearish sentiment. And so although there's potentially some bullishness going on here, but for the most part, it's not looking overly that way. Now, we are, of course, looking for this move to the downside, which is targeted out at 22,693 to 23,874. That's going to be the third wave drop. And of course, as long as we are below 28,588, this structure is valid. So we still look for further to the downside on the daily time frame. Take this up into the weekly. We do find ourselves again, the bulls and the bears fighting things out again, just testing up on that 50 EMA. We'll see whether or not that weekly close can close above. The bullish scenario would be that we would close close above that 50 weekly EMA, and the bears are going to obviously want to bring it back down more towards the 200 EMA, and ideally they want to close it below that 200 EMA, right, which will be 24,730. So for the most part, everything on the weekly time frame is actually not too bad. We have got some interesting movements on the stochastic RSI. It's not looking strong at the moment, but we are still oversold, so we could still rally up a bit. But I'm not liking the way that it's actually moved a lot more than I would have expected for a 2 weeks, 2 green candle kind of situation. But again, we'll see how that kind of plays out on that. But for the most part, I think we've got a bit of positivity to be seen on the weekly, not so much on the daily. And again, we just have these micro movements occurring on those smaller time frames. I'm going to leave this video right there though, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.